welcome everyone today. We're really excited, I guess, about our opportunity today, right? Because we get to have a discussion, and we're calling our segment Couch Conversations. So I think that it's pretty exciting when you've got a group of women like us, from professional arenas and being part of the gyms group. So, do you agree? It's fantastic to be in that position to have that sort of opportunity.
Absolutely. So my name is Vanessa. I'm from Gyms Financial Services, and we provide services that relate to anything finance, from home loans to vehicles to business loans to payment plans, personal loans for the gyms group.
Yeah, awesome. And Beck?
Yeah, I'm Beck, and I'm from Gyms Conveyancing. So we help consumers when they're buying and selling properties, whether they be the first home buyers, right through into the investors. So we just thoroughly enjoy helping people.
Yeah, we'll cap on that at some stage, but conveyancing is one of those things where I think people sometimes go, a conveyancer, who's a conveyancer? So we'll have to make sure that we cover off on that. Well, I'm Trish, and I'm from Gyms Real Estate. So I've been in the industry for probably about 10 years now. So I started buying and selling real estate in South Australia after getting my full licence, and so moved through a few different spectrums of real estate, different types of models. So I think that there's a misconception out there that you have to have a real estate agent to actually sell your property, and you don't have to have a real estate agent. So I think having the three of us, I guess, talking about our industry, we're very closely connected in what we do, so conveyancing, finance and real estate. So yeah, I think it's going to be great to be able to impart some knowledge to the audience, just to be able to help inform them, when they're out there doing those biggest transactions of their lives. And it can be very daunting when you're looking at having, I guess, a transaction of $500,000 or $1 million, and sometimes a couple of millions these days. It's a bit tough. So Jeannie, welcome with us today. So and talking about property and transactions, so I believe that you maybe haven't walked in the real estate world yet.
At the moment I'm sort of looking at maybe buying my first home, probably in the next year or so.
Wow.
So yeah, I'm sort of interested in getting some more knowledge on what the three of you do and how it's going to make my, buying a house run more smoothly.
So exciting and daunting all at the same time.
Yeah.
I think that's the thing when you're a first home buyer. Like there's times where you're just freaking out thinking, oh my God, what do I need to know?
Exactly.
And
Well,
so have you got no touch at all with real estate, so you don't really know anything?
Yeah, not much about real estate.
Okay.
So I'm just looking at houses at the moment, but I am sort of, obviously when I find a house, like how do I go about purchasing it? Is it the real estate agent? Do they put me in touch with, a finance broker, or is, the conveyancer as well?
Yeah.
So I guess if you could get someone that, that has all three people in place so it runs smoothly, that would be great. That's what I'd be looking at.
That's something that probably you and I find quite often is that that sometimes we get people come to us, they're looking for a home and they don't have their finance in place and they're not organised. Or you do actually get people who are the other way around, who have already got their finance organised and then they're ready to buy. So it's often the question as a real estate agent that I'll ask a buyer when they come through a home. So have you got your finance organised? Have you actually, do you know what your borrowing capacity is? So do you find that?
Yeah, absolutely. So yeah, a lot of people really, the financing side is probably the step number one to see what your lending capacity is and seeing how much deposit you need to gain to get into the market. Also, there's first home owners grant if you've never purchased a house
before. So how
before.
much is that at the moment?
Well, it varies from state to state. So we always try and refer people back to the State Revenue Office. But for Victoria here, if you spend up to $750,000 on a home, you get a $10,000 rebate in urban Victoria. But in regional Victoria, you can get up to $20,000. So that's favourable as well. We were talking about how some developers are sort of promoting the 5% deposit, and we were suggesting that the government also subsidises the 15%, but it's a loan that you need to pay back to the government. So it just depends. But, I mean, there are banks out there. The difference between coming to a broker opposed to going directly to the bank, we've got a panel of over 50 lenders available. So the 50 lenders means that you have opportunities to see what's on the platform.
And they try and find the best price for you?
Best price, whether your situation, how much deposit you've got, whether your partner's working or not working. So there's so many variables in the equation to ensure that that deal fits into their policy, because banks vary in their policies. So it's best, if you go to a bank, you get one option, one interest rate. So if you come to a broker, we can provide a competitor analysis of all the players in the market that fits your suitability and your, you know, your profile, your servicing capabilities and so forth, and we're bound to find a financier that's the most suitable for you. Okay. Typically, it's good to have a 20% deposit because then you're not paying loan mortgage insurance, which means that you don't want to contribute $10,000 to $15,000 unnecessarily, whereby you can save a little bit more money to not have that $10,000 to $15,000 that is unaccounted for.
And mortgage insurance, I think, is one of those things that a lot of people don't actually know about as a first home buyer. And I think, and you'll know this more than me, but there are some lenders who won't include that mortgage insurance in the loan amount. Is that right? Or do they or not?
Majority of them do.
Okay, that's good.
So, but it all goes back to servicing. So, you know, with all this Royal Commission announcement, the lending is getting tighter than usual. So you've got to be very aware of that and things that you don't account for when you're actually applying for a loan. Like if you go to, I don't know, go out for dinner twice a week, or you go and have bottles of wine, or you've got a gambling problem and so forth. So it's all that sort of stuff that you actually don't account for, that they actually go through your bank accounts very fastidiously.
So no more wine.
No more wine. But it all depends. It just all depends on, you know what I mean? They're very stringent in, you know, doing very strong reconciliation of your bank accounts and so forth to make sure the loan actually
So obviously
services.
make sure you've got mortgage insurance. It's obviously very important.
Well, not mortgage insurance. If you've got 20% deposit, you don't need loan mortgage insurance. But if you have like a 10% deposit, the banks will catalyse the mortgage insurance into the loan to make sure you.
Do we know how they calculate that? So is it a percentage, or because I know when I bought my first home back in, so it'd be 2000, and my mortgage insurance back at that stage I think was about $3,500, and that was on a purchase of it was under 200,000 at the time in Adelaide. So is there a way that they calculate mortgage insurance?
Well, it varies from bank to bank because they have different policies. But usually, like on an average loan, your average loan is probably $370,000 to $400,000. So it's usually about $10,000 to $12,000 on average.
Okay. And it's a figure that a lot of first home buyers, they don't actually know that they have to accommodate for that in the total figure. So yeah, and it does add, when you're a first home buyer and you're adding an additional $10,000 onto that loan amount. And it's one of the conversations that I was having with someone recently, and we were talking about that first home buyers grant and the whole 5%. And, you know, for first home buyers, it's fantastic to have an opportunity to get in the market. One of the concerns that I have, I think, is that what does that look like long term for a first home buyer when they're adding an extra 15% to a mortgage? So when we talk serviceability and affordability, so what I wouldn't want to see is an opportunity out there for first home buyers to get in the market, but then they overextend themselves and then there's a borrowing issue, and do you know what I mean? We've got people defaulting. So I think it's one of those things to bear in mind, that it's great to have a thought to get into the market, and certainly real estate in Australia is one of those things as well where, you know, everyone wants to have a house, it's the Australian dream, that sort of stuff. But you also have to be really careful, I think, not to overextend yourself. So, and that's why I think having someone, when you've got a broker, for example, who can roll through the different opportunities there, different lenders, really important to research and to find the right mortgage for you, so that therefore you're not in that situation where you're overextended and you don't want to, you know, I think it's
definitely the best way to go instead of just to a bank, because at least you can give different options and opinions.
And
they can find the right to buy.
Because you're not confined to
suits your.
That's right, Beck. You know, absolutely. So I think as far as the process, like all of us, of course, play a part in the transaction at some way, shape or form. So
do you refer people, like your clients, onto, you know, finance as well as conveyancing?
We can do that, absolutely. So, I mean, the three of us work quite closely together, which is fantastic because we're part of the same family, which is awesome. And I think that, in fact, we were just talking about maybe all moving into the same office together. Wouldn't that be crazy? But I think that one of the most important things is that you choose a service provider that you're comfortable with. So, and what I will often say to my clients is, if they don't have someone, I can absolutely refer them on. We are a heavily regulated industry. So, for example, if I was to refer someone on and I actually receive a fee for that, I need to actually declare that. So I don't actually take fees anywhere for referrals because I prefer to refer someone who's appropriate, say, for you, and someone who I think that would be suitable for you for what you're actually, I guess, looking at. So you guys the same as far as referrals?
Conveyancing 100%. I would rather refer someone on to someone that I trust that I work well with,
Yep.
then get my back pocket lined with their
Yeah.
cash.
Yeah,
It's, you know,
absolutely.
I'm looking after my client,
Exactly.
and that's my
and your
main
business
priority.
name.
Yeah, absolutely. So I think when we look at the process, you will come in touch with probably one of us at any one point, and maybe not necessarily say Vanessa or Beck first and then me, or me first and these guys. So everyone takes a different path. But I think Beck, maybe touch on some of the things like contracts or at what stage, because I think that when you get in touch with a conveyancer, sometimes you are referred to a conveyancer. Other people already have a conveyancer in place. So maybe give us a bit of an idea from, Jeannie's perspective or from a first-time buyer's perspective. What should she be giving consideration to or looking out for?
Yep. So most customers, when they come to us, they've already sourced their finance.
Okay.
Because they can't go and buy a house until they know how much they can borrow.
Okay.
So
Yep.
that's going to depend on what market they're looking at buying into. Then they go and find the appropriate house through the real estate agent. Then they'll contact us. So we're usually the last port of call in that chain of events when you're buying a home. So from our perspective, we can help with the pre-contract advice. We can go through the documentation that you're about to sign and do some investigations for you.
Okay.
Explain what it is that you're about to sign. It's a legally binding document. So you want to make sure that you are protected as a purchaser, and that is something that the conveyancer will help you through.
Okay. What sort of other investigations would you sort of run
So we're
through?
looking into things like the planning of the property,
Yeah.
what it's currently used for, whether that's going to be suitable for your needs.
Okay.
Obviously, we can't foresee what's going to happen in the future. We can give the advice on what the property is doing at the moment with the current zoning.
Okay. Yeah.
We're also looking at things if you're buying a unit, whether or not you've got issues with fees, what the fee structure's like. A lot of people are going in towards the city, they're giving up the suburban lifestyle and moving inwards.
Yeah.
They don't understand the concept behind owners' corporation fees.
Okay. Yeah. The body.
They can be quite high.
Okay.
And if you're not expecting that kind of an
Interesting.
annual fee, that can really affect your budget.
Okay.
So we help with things like that.
Okay.
Looking at restrictions on title, so that means what you can and can't do with the property.
Okay.
There's a lot of what we call single story or single dwelling covenants on the property. So if you're buying something with the intention to subdivide or develop that property, the title will show you what you can and can't do.
Yeah.
So we help consumers with that sort of thing.
And do you converse with the finance team as well as the real estate at times?
Definitely, yes. So when we're giving our customers pre-contract advice before they sign the real estate agent's contract, we will give them suggestions on what they should and shouldn't put through the contracts.
Okay.
We'll convey that to the real estate agent and make sure they understand why we're asking for certain things.
Yeah.
And that's to protect our client as the purchaser.
Yeah.
So that is something that we work with. And then again, also making sure that their finances are in order, because we don't want them to go through the signing of the contract until we know that they have got their finances at least started in that process. So yeah, we do work closely.
And covering off on things like deposit, one of the things is that a lot of people don't know or understand when do they need to pay their deposit. And what is that figure, but also when do you have to pay it? And who's holding the deposit?
Yes.
So, because I think there's a couple of different ways it can be done. So in real estate, I could run a trust account, and what can happen is the deposit when you pay it can actually go into what's called my trust account. That's a non-interest bearing account because you can't actually make any money on it. But it could also go into, so Beck as a conveyancer has a trust account. So the deposit, if I didn't want to run and manage a trust account as a real estate agent, that deposit could actually go into the conveyancer's
That's
trust
correct,
account.
yeah.
And does that happen often, or?
It's happening more and more these
Yeah.
days, especially as conveyancing is heading down the electronic path. So having funds in the real estate agent's trust account who aren't a party to the actual electronic conveyancing process can become a bit of a difficult scenario to get through.
Yep.
So by having it in our own trust account, that means that we can utilise funds from that deposit that would normally be dealt with after settlement. So yeah, for sure.
And also in a case where they don't use a real estate agent. So if you've got actually someone selling a property and they're not using a licensed real estate agent, which you don't have to do. So these girls could have a touch with someone who's actually selling, and I don't have to be involved in the process. So, and there are plenty of people out there who are happy to sell their own home. So it actually provides that opportunity for someone to be able to put those funds or the deposit into trust without having to have me in the process.
Yeah, and conveyancers, as Trish just mentioned, you don't have to use a real estate agent.
That's interesting.
You can,
So you can just sell your own house.
Yes,
absolutely. And you know what? I still to this day, I find it really interesting that the industry itself, I think, has created a bit of a scare campaign in reference to people selling their own property, because I find that I have this discussion often with other real estate agents where they've actually got someone who's probably more than capable to sell their own home. They're certainly in that position where they could save thousands of dollars in that commission, yet they're of that thought that they can't actually sell their own home.
So where do they place the ad? Gumtree, put a billboard up, or?
Yeah, look, so there are certain things with our industry around. A lot of the advertising portals do try to have the monopoly. To be honest with you, most electronic platforms you can advertise as an owner. Okay. So, and there are some, I guess, businesses or real estate companies out there that provide a service where someone can actually list their property still on realestate.com and domain without actually having a real estate agent assist them. So there are plenty of opportunities out there. So their property would still be in the same place as everyone else's are. So
we also find that you can buy off friends. It's amazing how many people will actually sell to someone they actually know. And it could be family, it could be friends.
So you get it quite often, do you?
It's not a lot, but yeah, it certainly happens out there, and that's something that we can help with. If there's no need for a real estate agent. But obviously a big majority of properties are sold through the service real estate.
And there are positives, of course, either way. But, I mean, some of the things when you, I guess, look at a real estate agent, why would you have a real estate agent? So, I mean, they are a professional and an expert in their industry. So everyone's different as to the training they've done. But, for example, I've done 8 weeks full-time to get my certification and then did my diploma on top of that. So, you know, there is definitely some level of credibility by having someone, you know, a licensed real estate agent
maybe
to
able to get a better price for you as they've got that experience.
Absolutely. There's definitely, you know, the opportunity for price, and also trying to help you, if you're a seller, ascertain what price you should be selling for. I think, you know, it's really important. That's right. Know the local area knowledge and make sure that they're all over, you know, the statistics data. So not just even local area, but sort of general what's going on in the marketplace. I mean, we've just seen, what a tough year has it been in Melbourne for the last year.
It's been
hard. And I think it's been really tough, especially for the three of us. We've certainly, when it started with the Finance Royal Commission, probably a bit over a year ago, and then when lending sort of tightened up, that then rolled on and affected, so from a property perspective. So it sort of flows on, and I think it goes in waves. And one thing about the market is that it goes up and down, certainly over the years, and there'll be rises and falls. And you know, there's a property clock. I'm not sure if you guys have talked about this concept before, but certainly in Australia, there's times when someone will be at the peak of the clock and then another state will be at the bottom of the clock. But poor Sydney and Melbourne have done it tough for the last 6 to 12 months, and Melbourne especially. And I was reading something a couple of days ago that was talking about the fact that the property market's at the worst it's been for 2 decades. While I think that, you know, people will say, oh, well, you know, in property it is a bit of a tough year, it really is tough. And having those conversations and listening to people who have been in the industry for over 30 or 40 years who are now leaving because, you know, they're really struggling to be able to make ends meet, you know, it's pretty sad because there's plenty of good people who have been in the industry for a really long period of time. So but like, I mean, how are you girls finding it at the moment here on ground in Victoria?
Well, I think we're really lucky that Liberal came in back as, you know, in the government again. So I think Labor would probably had a bit of more of a decrease from a lending capacity in real estate and so forth. So
longer time to try and turn it around.
Exactly. So I think it's going to be on a slow incline now that, you know, Liberal is back in again. Also, you know, I think people are just being cautious because it's been such a turbulent time because of the government as well. So I think everyone's starting to gain more confidence. And I think, personally, the property landscape and the financial landscape will get a little bit more lenient. You know, people will start investing in property again, or, you know...
Could you give a time frame, like maybe 6 to 12 months?
I reckon 6 to 12 months. I think we'll be back on board.
And that would be a good time to buy or go back into it?
Yeah, well, I think now's a good time to buy, personally, because it's at the lowest part of the market. So I think get into something sooner rather than later, because it's going to slowly increase again.
In the house prices,
Exactly. House prices, as well as, I mean, we had a 0.25% decrease from the Reserve Bank recently, and that's been...
That's when the first drop for months.
I know, exactly.
And there was talk for many months beforehand about whether it would happen or not. And and it happened. And that impacts everyone, you know what I mean? So, because I think, you know, the government is number one, the financial services area of Australia is number two, and then everything infiltrates because, you know, as soon as the market goes down and property prices drop and it's harder to lend money, everyone tightens their purse pockets.
and they don't go out for dinner, or they won't go and get their lawns mowed, or they'll miss the housekeeping or like the cleaning services and so forth. So I think the economy is starting to gain some more confidence. And I think in the next 6 to 12 months, this is just my personal belief, is that it will start bouncing back. So I think now is the best time for you to get in and start researching. You've got your deposit together.
And I think serviceability, that interest rate drop that was last week.
Yeah.
But one of the other key things is that serviceability has been really tight for the last, they've been clamping down. But am I right that they're going to bring in potentially a new scheme to calculate serviceability for people looking at lending? So I think there's two parts to the lending process as far as that. So because I think that you can be, I'm self-employed. I mean, all of us here are self-employed. So, but when you're self-employed, it makes it so much harder from a lending perspective.
Absolutely.
So I don't know if you girls have experienced it, and you would, of course, be on the receiving end of having plenty of clients come in who are self-employed, but it does make it harder to look at lending in that situation. That's why, of course, having the right.
I think at the moment we've had the highest number of clients that have purchased properties and they've put the contract subject to finance, and they've actually had finance declined. We're at the highest rate of having that occur.
Do you need more of a deposit if you're self-employed?
Not necessarily.
Like
I think it's
house.
financials. Like, people think when they work for themselves not to pay tax. It's actually good to pay tax to lend money.
Absolutely.
So it's like this catch-22 where I've got this fabulous accountant that I don't have to pay much tax, but it actually, from the lending perspective, is actually having the reverse effect on your lending capacity. So my advice is, if you are looking at lending, if you're a self-employed individual, you need to,
Keep up with your tax.
Well, not necessarily keep up with your tax, but just advise a strategy to your accountant and say, this is what I'm planning on doing. I'm going to be, I want to buy a house in the next 12 to 18 months. I need to ensure that, my tax returns as a business owner look favourable, so I can lend money. I'm looking at X amount to lend. Because if you don't do that, I mean, there's add backs when they take that into servicing and so forth, but usually the accountants don't understand the financial implications when they don't have a really good tax return. They think that not paying tax is favourable for their clients. It's actually doing them an injustice if they want to lend money. So, but I mean, if you're a PAYG, it's pretty straightforward. It's always favourable if you've got a partner that you're lending with, because then you can lend more money. But it's all that sort of stuff.
And look, I think it's for any of our investors out there at the moment, I think one thing that they really need to be careful of is that it's fantastic that the government's got in and that we've still got the negative gearing situation there, but the ATO is actually going to increase the amount of auditing that they're going to be doing on investment properties over the next 12 months. So I think they've added another 25% of staff at the ATO or something close to those. I'm not sure on the exact figures, but they are definitely going to be scrutinising. So it is important, when you're self-employed, to put everything through the books and make sure that you do everything legitimately. And while, yes, you absolutely want to make sure you're in that situation where you're claiming as much as you can in your tax, you want to make sure you're doing it fairly and legitimately, because otherwise you're probably going to have a bit of a tap on the shoulder from the lovely tax man saying, what are you doing and why is this not right? So I think it's fantastic that that we've certainly still got that negative gearing situation there. And I think for investors, and I noticed, because I'm assisting with the sale of a property at the moment, and the numbers that have been coming through at home opens are still high. So in about a 4-week period, I still had 30 or 35 groups through as far as buyers. So it was great to see the numbers there, but you touched on it before, everyone was keeping their hands in their pockets. So they certainly are out there looking, but they weren't actually buying because they didn't want to make a decision in case, and especially because I had a few investors who I actually spoke to in that particular time frame, and they were very concerned that they were going to lose any opportunity as far as claiming from a negative gearing perspective, because yes, we want to be profitable, and yes, we want to be in a position where we're positively gearing. That's the aim. It's like, putting, I guess as much income through our businesses as possible. We want it to be there, but you don't always start off there. So often you will start off in that negative gearing position before you can actually build your portfolio up. So from an investor's perspective, it's great on one hand, but they just need to be a bit cautious on the other. So
But there's also low doc available to business owners as well. Like, sometimes financials are very complicated, or they haven't got them up to date, or the accountant hasn't closed them off. So with regards to financials, you can do low docs with some financiers, which are second and third tiered lenders. However, the interest rate is a lot higher.
Okay, yeah.
But I mean, you can do that if you want to get into the market and, finance it with that bank for sort of 6 to 12 months and then refinance it to get.
Do you need a bigger deposit though to do that? The low
Not
rates?
necessarily. No, you don't. But just the interest rate's a lot higher. So there's a lot of people that focus on interest rates. Like interest rates are lower if you're an owner-occupier purchaser. Okay. But if you're an investment purchaser, the interest rates are higher.
Okay, how much higher normally would it be?
Well, you can get under 4%, quite reasonably in the economic climate at the moment for an owner-occupier. But for an investment market, probably best is probably early 4s to high 4s. Okay. But then if it's a low doc, it's usually over 5%. Okay. Mm-hmm. So, I mean, that could, over the term of it, like people come to me all the time and are very interest rate driven, but interest rates are one thing. It's about you getting into the property. A lot of people get fixed on interest rates. Yeah. Do you want to get into the property or don't you want to get into the property? There's two different strategies. So interest rates are one thing, but secondarily to that is, do you want to get into the property? Like some people really are focused on the 0.2% or the 0.1%. It really isn't necessary at that given time because, if it's set up in a bank in that with that particular financier, they might have an offset or it might just be a basic account, so you could offset the cash against it. So there's lots of bells and whistles if it's slightly higher with a major bank as well. So there's lots of variables in the whole equation.
And could you renegotiate? So if you were on a low doc loan and it was a high interest rate, you could say, on your contract, I want to go back in 12 months. Yeah. And, see what else
absolutely.
is available.
Absolutely. Some banks are able to do that. Okay. If they know you're being diligent and paying it off and they know that's what your long-term objective is, they'd be willing to do that. But it's probably best, once again, get your broker to negotiate those terms for you. Yeah. Because you don't know the lingo or the power and so forth and the negotiating skills or the relationship with those BDMs that can negotiate that on your behalf.
That's good to know.
Yeah.
I think that's actually something that, like when we talk about you're saying in your world about interest rates or those sorts of things. And so it was just making me think about something that I was thinking about the other day in relation to commissions. So when people are out there looking to choose a real estate agent as well. And I think that often people get fixed on price. It's something that I hear Jim talk about in training when, everyone comes through training, and it's that whole thing of, there's a misconception that you need to be fighting for the best price or the lowest price. But that's not always the case. And sometimes it's that value add that you get in other areas, like your customer service or... in real estate, it might be don't concentrate so much on the commission that you're actually paying. So it's more about what is it that you're going to get as far as value back, and is it that the agent that you've chosen, for example, can negotiate a better price for you at the end. And so, I think that we work in industries that are highly emotional for people because it is such a big transaction. But it's one of the things I caution all the time with anyone that I engage with in property is that a very hard thing to do, but try and remove the emotion because when you're in an emotional state, that's often from a human perspective when you won't always make the best choices, and you might not choose the right person to assist you in a certain area, or you might not choose the right financier. But I think it's really important to try and weigh up all options and to try and remove that emotion when you're actually in that transaction. So, and it's like in property management. So one of the things that I find still interesting is you've got an owner who's got a property and they're wanting to achieve a certain weekly price. So in this example, let's say they want $500 a week. So they'll stand firm on wanting $500 a week, and they'll have the place empty for 2 or 3 weeks, which equates to $1,500, for example, on 3 weeks. Yet all they needed to probably do was drop the actual weekly price down to, say, $490 a week. They possibly would have got a tenant in, and they still will have made more money at the other end often. So I think, it's one of those things that when we're giving advice to people, it's like try sometimes to think beyond the figure. So, because I think that it's, you need to delve into so many other parts, especially in any part of our worlds where not just the commission, not just the percentage, not just the figure, not just what you pay, but it's all those other aspects.
Yeah, what do you get with that? And it's customer service has to be number one.
Absolutely, Beck, I mean, it's one thing that we've all got in common, I guess, in the gyms group. I mean, there's 54 divisions and you know, and certainly, obviously, yeah, mowing's number one. And I haven't got my mowing shoes on today. I don't know about you girls, but and I haven't got my high vis on either. And we can get someone to mow a lawn, right? But
Yes, we can.
it's certainly not going to be me in my suit. That's for sure. But yeah, one of the things that we've all got in common is that all of us get to engage with Jim in the process, and I think that one thing he's exceptionally passionate about is that customer service and putting the client first, and certainly looking after his franchisees. So we're all in our roles as, I guess, divisionals and business owners, and we engage with franchisees and franchisors through our week, and we're experts and professionals in our industry, and you know, we at a higher level, I guess, look after our franchisees or franchisors. They're often the ones who are frontline, probably a little bit more than us actually engaging with the client. But you know, what's the thing? One of the things we love, you know, about one of the things I love about what I do is that it's what appealed to me right from the outset when someone said to me, "Oh, well, why did you have the opportunity with Jim's Real Estate? What was it?" And for me, one of it's about customer service and about giving that value add back to the client, and not being so focused on, you know, I guess the company's perspective, but being focused on what their achievements are and where do they want to go and what do they want to do. And so if they're selling, for example, why are they selling in the first place? Or if they're trying to build a portfolio from a property management perspective, what do they want to achieve at the end? I think, you know, so often it gets forgotten about what someone actually wants in the process and what they're trying to achieve.
Okay, so I've heard a lot about finance and real estate. So what part do you play in this with conveyancing, like with the contracts? And, you know, I've heard a lot about Section 32s. I don't know what it is, so maybe you could sort of give us some information.
Certainly. So as a conveyancer, yes, we prepare the legal documentation that you are required when you sell a property. So we start with the Section 32 statement, which that is a disclosure document that is required in Victoria. Now, all states are different with what is required from their disclosure perspective. So in Victoria, it's called a Section 32 statement. So we would prepare that on behalf of the vendor based on the information that we source. And it touches on things like the council rates, restrictions on title, the planning of the property, has permit information. So if there's been any extensions or any like a swimming pool or a spa that required an actual building permit, that's required to be disclosed in the Section 32 statement. So that is what we touch on. And we will also prepare, in most cases, at the contract of sale on behalf of the real estate agent. So yes, some real estate agents will do their own contracts, but it is becoming more and more popular for the conveyancers to actually prepare the contracts to begin with.
And you can advise what they should have in the contract before they sign.
We can.
The
So
sale.
whenever we have a customer that comes to us and wants to sell the property, we always go through a list of what we call chattels.
Okay.
So they're things that may stay with the property or go.
Yep.
And we want it to be very clear, black and white, what's staying, what's going.
Yeah.
So we always have a series of questions that we ask our clients. If there's something that we're not sure that's going to stay with the property, we would say to them, you know, if there's any doubt, put it in the contract.
Okay.
That way, if it's in black and white, no one can argue with it. It's written there, and everyone's expectations are the same. So yeah, we prepare that documentation from the start.
And when you're sort of looking into buying the house with the Section 32, would you put a deposit down and then get a conveyancer to have a look or organise the Section 32? Or would you organise the Section 32 first before?
Okay, so there's two different sides of that. So as a seller of the property, you are required to prepare the contract and Section 32 statement.
Okay.
Whereas as a purchaser, you are given that documentation to
Okay.
look
Yeah.
at.
Okay.
Now, the general rule when you are putting down a deposit is you would put down a holding deposit to begin with, which is usually a nominal amount of $1,000 to $2,000. And then once the acceptance is signed off by the vendor, you generally have a 2-week period to pay a deposit. But again, it's dependent on the contract.
Okay.
So that's something that we go through with the purchaser at that stage
Okay.
and advise them, right, are you in a position to pay your deposit? If they're not, we run through the different options that they have available. So when are you going to be in a position to pay it? If they're not going to have a deposit behind them, we can give them other alternatives to be able to pay a deposit by deposit bonds or bank guarantees.
Okay.
That's a whole nother level of...
So
Yeah, I might
different
get
in
you to touch on that.
and it's so different in every state. Like, so nobody puts a nominal deposit down in South Australia.
Okay.
So, and you know, it's just, and this is the thing that I find for such a big country.
Yep.
So that we have so many different states that, like in New South Wales, you've got to have a contract to go to market. In SA, you have to have a Form 1 prepared. You don't have to have it prepared before you go to market, but you do have to have it prepared before you actually have a contract.
Correct.
So I think it's very important for everyone to check in the state that they're actually in. So
Yes.
whoever might be watching us, I guess, at the moment, to make sure that they check in that state.
Yes.
But aside from the Section 32, like, what's that process? Like, so someone comes along and, you know, you've prepped a Section 32. So what's that process and what time frame do you sort of see that over? Is it 1 month, 3 months, or is it dependent on the sale? And then what happens after that Section 32?
So once we've prepared the Section 32 statement, obviously we just handball it off to the real estate agent in most cases and let them sell the property. That's what their job is then to do. So we take a step back while that process is actually occurring. At the moment in the current market, it has been a longer time in between that Section 32 preparation and the eventual sale of the property. But, you know,
Why
12
is that
months
at the
ago,
moment?
just because the industry market at the moment has slowed down,
Yep.
properties are taking longer to sell.
Okay.
Whereas prior to that, it could be anywhere from 2 weeks to, 6 months. It just depends on the location of the property, what type of property it is that you're trying to sell, and what the finance market's like as to how quickly that will go. In Victoria, the Section 32 statement has a shelf life of approximately 3 months.
Okay.
But again, it does depend on the information that's been disclosed. If there's a change in that disclosure, then they would need to be updated. Okay, so that would, again, it's just dependent on each individual property.
Okay. And so do they have to be, like in South Australia with a Form 1, once it gets to that sort of 3 month mark, all searches need to be refreshed to be able to, is that the same for...
It is the same in Victoria as well, and I believe it is the same in the other states. I do know a little bit about the Queensland and New South Wales, and they are required to update information as necessary, yes.
Because I think it's an important thing for anyone who's coming along and buying. So you've got certainly that period of time in that 3 months, but if someone just puts in a development application in the house next door and they're going to turn that one story into like 5 stories, you want to be able to know that, right?
Yes, absolutely. And also on the other side of the coin, where you've got rural properties, they don't turn over very often. It can take up to 12 months, if not more, to sell something in country Victoria. So, we can prepare a Section 32 statement, and next thing we know, 12 months is gone and the agent sold it. And we're like, okay, we thought we'd taken it off the market, but you haven't. We have to obviously do our due diligence and make sure that Section 32 statement is not defective and will void the sale. So we're able to do that quite quickly and work in conjunction with the country real estate agents.
Yeah, right.
And what other contracts do you prepare after the Section 32? Like you're going to go ahead with the purchase of the property. What other contracts do you?
Okay, so the Section 32 statement is a disclosure document. There's no contractual obligations with the Section 32. The document that you would be signing that's legally binding is the contract of sale. Now, whether that's done by the conveyancer or whether it's done by the real estate agent, it doesn't make it any more or less legal depending on who prepares it. It's essentially the same. So ideally, what you're talking about in the contract is, purchase price, settlement dates, deposit amounts, conditions that you want to put on the contract. So I mentioned earlier about putting a contract subject to finance. So if you were a first home buyer, there's no way I would recommend that you sign a contract unless you put it subject to finance, because you really don't know until you go through that formal approval with your broker as to whether or not you're going to get through. If you're paying cash for the property, that's fine. You can do what you like. And it's amazing how many people are actually paying cash for properties. And I don't mean cash under the mattress. I don't mean that they don't require a mortgage from that perspective. So, other than the contract of sale, that's as far as legal documentation is required.
So what normally happens between, I guess you've got the contract and it becomes unconditional, so then you roll through that process to settlement. So settlement's actually something that a lot of people don't really have a lot of understanding about, as far as what is that process. And so as a real estate agent, I'll get so many people who will be highly emotional up to that point where they've then got a contract in place that goes unconditional and they go, what now? So what sort of happens in that path, I guess, once you've got someone who's got an unconditional contract through to settlement, and what kind of happens at settlement?
So predominantly as the conveyancer, we need to make sure that our clients are the ones who find it seamless. They don't need to know what's going on behind the scenes so long as the job's done. And that's one of the things that we do pride ourselves on, is to make sure that the client doesn't know if there is any hiccups along the way where we're discussing things with the other representative, whether it be the buyer or purchaser's conveyancer, the real estate agent or the banker, broker. whoever it may be.
Yep.
It's our job to make sure that everything is seamless and that you get from that contract signing point right through until settlement, and the keys get handed over and they move into their brand new property.
That's what I would like. Yeah.
Yeah.
Sounds good.
Yeah, and that's all the consumer needs to know.
Yeah.
Literally.
Yeah.
But essentially what we're doing is we're liaising with the banks, whether it's being the purchaser's bank or the vendor's bank, the real estate agent, to make sure, deposits are paid on time and that everything is going smoothly at their end, keeping them up to date with when the settlement's occurring. So although the real estate agent may know what the date is, there are times where we change the date, and that's at a request of either the buyer or the seller. Then the real estate agent needs to know that, because they're the ones that are essentially handing over the keys.
Yeah.
So they need to make sure they've got keys in their possession that they can then hand over on the day at whatever time settlement actually occurs.
Yeah. And I think settlement, so I had a client and they were like, something came up about land's title office. And I said, that's the whole idea. Settlement's about certainly ensuring that all of the ingoings and outgoings on the property are settled, so between buyer and seller, so as far as the end figures. But it's also about ensuring that the title of that property actually gets transferred into your name, because when you've actually got a buyer and a seller, so the seller, the title's in their name at that point in time, so that needs to transfer from the seller to the buyer, and really, so it's involving land's title and some of those other department bodies to ensure that from that perspective it goes through smoothly. So
correct. So conveyancing
you're paying a lot of money.
Exactly.
Want to make sure the house gets into your name.
So conveyancing essentially is the transfer of legal ownership of property from one entity to another. That's our end game, is to do exactly that. So we work with the State Revenue Office, and each state obviously has its own State Revenue Office. So we're making sure that stamp duty is paid appropriately, and the correct concessions are put in place. So you do have principal place of residence concessions, you have first home buyer concessions, you have concession card concessions. There's a varying degree of stamp duty rebates that you can get. It's our job to make sure that the client knows what they are entitled to, and that they get that applied. So we're dealing with the Revenue Office, we're dealing with the Land Titles Office in Victoria, and that's the one that's responsible for the actual change of ownership from one entity to another.
So what other services does conveyancing provide apart from the sort of real estate side of it?
So a lot of conveyancers will do subdivisions or assist in the subdivision process. So if you've got a client that's buying a property to develop into split blocks or multi-lots, the conveyancer can help with that process. We can also do change of ownership, so between husband and wife, for example, whether it be their matrimonial home or an investment property that they're needing to change for tax purposes. We can do all that sort of stuff.
Or for separation or divorce.
Separation, absolutely we can, yes. So one of the benefits about conveyancers is, yes, we're all licensed as conveyancers, so we are accountable. You have to have a qualification to be a conveyancer, just as a lawyer has to have his degree to do his lawyer work. Conveyancers specialise in property. Specialise in
really good
property.
point there. I think that's because a lot of people don't really understand the difference between a conveyancer and a lawyer. And I think that you do have property lawyers out there that work specifically in property. But I think that one of the great things about using a conveyancer is that they look after property nearly every day of the week, right?
Yes. So I don't do anything other than property. Every 100% of my work is property related. So I'm dealing with property day in, day out. And I'm not taking away from lawyers, don't get me wrong. They've got a law degree, they know what they're doing. There are files that, if it became too onerous on me and I'm looking to protect my client, I will actually go and refer back to my solicitor. So I do have a solicitor backing, and most conveyancers do have a solicitor that will back them. But whether you need a solicitor for property purchases or sales, in my opinion, no, you don't.
Thanks, lady. It's been really lovely chatting with you three. So if you could just give me one lasting bit of advice, what would it be?
Okay. Well, I'm going to give you just a little bit of advice from a buying perspective. So I think it's really important when you're out there in the marketplace, just getting local area knowledge and information on the areas that you're actually looking. There are plenty of reports out there that you can actually obtain. It is good to actually have a conversation with a real estate agent in reference to what's going on in the marketplace as far as pricing and stuff like that. It doesn't necessarily, and probably shouldn't be, the real estate agent if you're looking at a particular property. I'd love to think that you're actually already got enough knowledge beforehand. So someone like myself can put a report together for you, a suburb report, which shows statistics. It can show you what trends have occurred over the last sort of year or two. It can also sort of look and show you, if you're looking in 2 or 3 different suburbs, what you might want to do is you might want to have a look and see where has one of those suburbs, has it already had a boom? There might be one of those 3 suburbs you're looking at that hasn't had a boom yet. So I think it's really important to have knowledge. So yeah, absolutely. Pick up the phone and give me a call if you need some help.
I will. Thanks, Trish.
Well, my sort of hot tip would be always get your finances sorted straight away so you know exactly what your lending capacity is. Just keep in mind, though, you've got a sort of pre-approval for usually sort of 60 to 90 days.
Okay.
And anything could change. So the great tip that Beck left you with also is to put to ensure that you're, say, as a special condition subject to finance, because you don't want to get involved or lock yourself into a contract because anything could change.
Yeah.
Also, just manage your expenses really well when you're going to lend, probably minimum 3 to 6 months to really...
So no wine.
No wine, no gambling, no extra shoes or anything or jackets. Just be really stringent in, what you're doing for your expenses, because they will go through those bank statements and they will actually find that what you've declared on your living expenses can sometimes be out.
Okay.
So that's my take on it.
Be
Be thrifty and give us a call because we'll value add. We can also prepare you for like a long-term strategy. If you want to get into an investment property, we could discuss it together, what your long-term strategy is, getting into your first property, second and third property, what you need to do to hit those milestones.
Okay,
as well.
so if someone doesn't have money, but they're wanting some advice, they can come to you and
Absolutely.
say, hey, can you sort of help me budget for 12 months?
Absolutely. So that's like a value-added service that we provide because we've got our heads across so many different applications, and a lot of people, don't understand that sometimes people will buy a car and they want a house, and it's like, hold the car because that's going to impact your servicing ratio. You know what I mean? So it's all about strategy at the end of the day with finance, and getting the right strategy is number one rather than, buying a car or going on a holiday. If you want to focus on buying a property, you just need to make that your commitment and focus on that.
Think the big picture.
Yeah.
No line.
Exactly.
I just kept hearing.
So that's my take on it.
Thank you.
From my perspective, the advice I'm going to give you is when you're buying property in particular, you can listen to your family, you can listen to your friends, but go from the advice that you get from your conveyancer. So many people out there would, get advice from family and friends because they haven't done it before, and that advice can be ill-advised. Okay. So definitely go and seek the advice of a conveyancer before you sign anything.
Okay, great. All right, I think we're going to wrap it up there for today. So thanks, Jenny, for being here. I think it's been really great to have someone have a chat with us just around wanting some additional information on some areas that we cover off on in our professional arena every day of the week. So to our audience out there, I hope that you have got some value from everything we've been discussing today. We certainly will get together again at another stage. So if you do have any questions that we haven't capped off on today, we would love to hear from you. And then that way we can cover off on that in our next segment. So I guess some really key things, though, if you want to get hold of any one of us, there's a couple of ways that you can do that. So you can go to gyms.net and you can look for the respective services that we do. So that would be conveyancing, finance, or with me, that would be real estate. You can also pick up the phone and call us. And so what's the number? 131 546. So give us a call. There's 52 divisions, I think, in the gyms group these days. So I would be imagining that most things when it comes to property or home services, finance, but then all those additional services, you'll definitely find it there. But we'd love to hear from you. We would love to help you make some really great choices in some of the things that you do. So until next time with our Couch Conversations, we look forward to seeing you then.